Dirty dealings, corporate battles, consumer woes. This is Evening 5. Google will invest $2 billion or 9.4 billion ringgit in Malaysia to house its first data center and Google Cloud region here. The Ministry of Investment, Trade and Industry or MITI said the site will be located at Sime Darby Properties Elmina Business Park in Greater Kuala Lumpur. The investment will support 26,500 jobs across various sectors, including healthcare, education and finance, with a total economic impact valued at 15.04 billion ringgit. MITI Minister Tengku Datuk Sri Zafrul Abdul Aziz said this investment will significantly advance the digital ambitions outlined in the country's new Industrial Master Plan 2030. The data centre will power Google's popular digital services such as Search, Maps and Workspace, while also playing an essential role in enabling Google to deliver the benefits of AI to users across the country. Meanwhile, the Google Cloud region will deliver high-performance and low-latency cloud infrastructure, analytics and AI services to large enterprises, startups and public sector organizations, while maintaining the highest security and regulatory compliance standards. Bank Negara Malaysia and insurers are working on new insurance plans with cost-sharing provisions amid rising healthcare costs that will inflate claims and lead to higher premiums for consumers. According to the Life Insurance Association of Malaysia or LIAM, medical claims payout increased 26% in 2023, following a 34% surge a year earlier. It said the higher medical claims are expected to add pressure on premium increases in the future. In the association's latest annual report, LIM President Raymond Liu said policyholders are provided options to manage the cost of their insurance premiums. These include lowering their premium by converting it to a cost-sharing plan and reviewing or altering their policy benefits to suit their situation. LIM said claims data from 2018 shows that hospital supplies and services accounted for 60 to 70% of claimable surgical and non-surgical treatment costs. These costs are not regulated and are increasing faster than other hospitalization costs. In 2023, the total claims payouts climbed 14.9% to 15.4 billion ringgit from 13.4 billion in 2022, driven by an increase of 41.4% in disability payment and 26.2% in medical claims, data from LIM show. New business total premium, meanwhile, rose 11.6% to 13.4 billion ringgit in 2023 from 12 billion ringgit in 2022, thanks to strong growth in group policies and investment-linked policies. Australia and New Zealand Banking Group or ANZ is inviting bids to sell its remaining 5.17% stake in AMMB Holdings for up to 701.16 million ringgit. The sale would mark the exit of the banking group from Malaysia's sixth largest lender by assets. According to a term sheet cited by The Edge today, ANZ Fund is putting up its remaining 171.02 million shares in AMMB for sale at an offer price of RM4.05 to RM4.10. The offer price range represents a 2.84% to 4.03% discount to AMMB's closing price today of RM4.22. The offer is set to close tonight with a trade date fixed for tomorrow. CIMB Investment Bank and Bank of America Securities are the joint book runners for the block of shares being put up via ANZ Fund. In March, ANZ, which has long made known its intention to let go of its block of AMMB shares, offloaded a 16.5% stake for 2.1 billion ringgit, slashing its stake to 5.17%. AMMB's largest shareholder currently is the EPF, holding 14.3%, followed by founder Tan Sri Azman Hashim, who holds an 11.8% stake. Leong Bank said its third quarter FY 2024 net profit rose 12% thanks to higher interest income and provision writeback. Its quarterly earnings totaled 1.04 billion ringgit. Net interest income rose 15% to 1.22 billion ringgit, while non-interest income fell 38% to 212.1 million ringgit. No dividend was declared for the quarter. Leong Bank Managing Director Kevin Lam said it remains cautiously optimistic with the business outlook and macroeconomics for the remainder of FY 2024. Net interest margin, a measure of profitability from interests charged on loans after deducting returns paid to depositors, came in at 1.85% at the end of March, thanks to strong lending growth. Current account savings account growth stood at 7.6%, while gross loans and financing grew 7.8%. In terms of asset quality, gross impaired loans, debts deemed unrecoverable as a percentage of total loans, came in at 0.57%, while loan impairment coverage was 154.4% at the end of the period. Its common equity Tier 1 capital stood at 12.5%. The group's performance boosted earnings at its parent company Hong Leong Financial Group, which posted an 11% rise in third quarter FY 2024 net profit to 818.07 million ringgit and a 3.8% improvement in quarterly revenue to 1.7 billion ringgit. No dividend was declared for the quarter. Shipping firm MISC saw its first quarter FY 2024 net profit rise 24% on the back of higher earnings from most of its divisions. Its quarterly bottom line stood at 759.9 million ringgit. Meanwhile, revenue for the quarter rose to 3.64 billion ringgit, mainly due to a weaker ringgit against the US dollar. MISC declared a dividend of 8 cents per share, totaling 357.1 million ringgit to be paid on June 27th. On its outlook, MISC said that for the current year, prospects for the liquefied natural gas shipping market remain positive, while operating income for the gas assets and solutions segment is anticipated to remain stable. As for the petroleum shipping segment, MISC said the current year outlook remains positive with favourable tanker supply-demand fundamentals. Its petroleum and product shipping segments will continue to identify opportunities, particularly in dual-fuel assets, and focus on building long-term secured income to generate business growth. It said demand for floating production, storage and offloading units is anticipated to remain robust throughout the year, primarily driven by an increase in global oil demand and a healthy number of planned projects, mainly from Brazil, Africa and Asia Pacific.